Markets often go through phases of style rotation. How should investors think about the rotation between quality and value styles?
Sure. So Vetri just touched upon this very, very briefly when he said that value has had a very strong run in the last 4 or 5 years, and style rotation is inevitable. In fact, I'm just reminded of that very old saying that death, taxes, and reversion to mean is the only certainty that exists in life. And reversion to mean is a very, very I would say, potent principle of the stock markets, of all financial markets, and certainly the stock markets as well. And here again, after a very long run of outperformance shown by the value style, we do believe that the quality style should now start to come back and the value style should take a pause. By the way, what you see in front of you is the value versus the quality cycles all the way back to 2006. And on a 1 year basis, we see here shown in the blue shaded area the phases of value outperformance, and equally in the blue shaded areas the phases of quality outperformance. As you can very well surmise after looking at this chart, we have gone through a prolonged phase of value outperformance starting 2021. Yeah. If we go to the next slide, it's the same data, but from a 3 year rolling perspective this time. Of course, the 1 year rolling data, gives a little more noisy kind of output. But if you try to smoothen it out by looking at 3 year rolling outperformance or underperformance of one factor versus the other, this is how it looks. Once again, on the extreme right hand side, starting 2022 this time, because you're talking about 3 years instead of 1 year, value has seen a massive outperformance. Compare the recent yellow shaded area to the previous yellow shaded areas, and you'll be able to appreciate the magnitude as well as time frame that for which the value factor has outperformed this time. Yeah.
Yeah. So, Ajay, from a long term wealth creation perspective, how does sticking to a single investment style or style discipline help investors create wealth over time?
Sonal, I think let's start by looking at this very, very famous and powerful quote by Charlie Munger. The big money is not in buying or selling, but in waiting. And I think this is a very profound statement. If you look at some data on the next slide, you would see that indeed holding on to your style does work. So let's look at data since 2011 till date. Every year there is one style factor which is doing well. So we have made a comparison between quality and value. In certain years quality does well, in certain years value does well. Sometimes 3 to 4 years back to back, one style does well and the other side's style suffers. But let's look at the extreme rightmost columns, which is basically the annualized return since 2005. Despite this rotation, what is extremely supportive of remaining style pure and sticking to what you're doing for the long run is this data, which shows that both the value and the quality indices are giving 17% annualized returns, and both of them, by the way, are outperforming Nifty 500. So there is absolute merit in staying focused and staying true to your style, while of course the markets will change their moods. But if you don't change your portfolio, you would be able to actually ride on the change in style whenever that happens, and therefore, like I said, recoup the underperformance of the previous years and generate outperformance eventually. Yeah. By the way, one of the other things that you can look at from our portfolio is the fact that it has a very low turnover ratio. So once again, like I mentioned, we remain true to our style. We haven't moved the portfolio too much. Of course, there have been some new ideas that keep getting added every year, but from a style and positioning perspective, we've remained committed to that. Yeah.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.